Good afternoon, ladies and gentlemen. Glad to be here. Red Cloud, thank you very much. With me today are two members of our senior management team. Michael Medding is Vice President and General Manager. Could you put your hand up again, Mike? He's just over there. Of our McEwen Copper Division. And Stefan Spears is handing out a few presentations. He's Vice President, Corporate Development. Safe harbor statement. Okay. So we have assets spread through the Americas. In the gold and the silver are our mines. Canada, Nevada, Mexico, and southern Argentina. And we have two copper projects that are held in McEwen Copper. And I'd just like to make a statement that we've had a very challenging period. I call it the road to hell that started back at around 2018 and seemed to end at the end of August of 22. And we now are on the road to redemption, I feel. And when I say we got beaten up badly and deservedly so because we missed on guidance, not once, not twice, 3 times. And so we plummeted in share price. I've never seen so quick an erosion of goodwill in the marketplace. But today, I think we're trading at a very large discount to the sum of our parts. So there are 3 parts to our story. There's the McEwen Copper, which we currently own 48% of. There's a royalty portfolio, 5 of them. None of them are paying at the moment, but some are on a large property, and our gold and silver. What we've done is on the McEwen Copper, it's principally the Los Azules copper project, which is a massive copper project in Argentina. There are 2 other projects in the area, Jose Maria and Filo, and we're in between their value, and I'll talk about that a little later. There's a 1.25% royalty we own on Los Azules, which would generate, at current prices, about $18 million a year for 27 years. And then the gold and silver, we took a peer group of 4 companies, looked at their economic value per ounce, and said, well, if we traded at a 50% discount or a 50% premium, that gets the high-low. So you're looking at a discount here of 23 to 78%. So from $8 to $30 a share, and we're trading at 6. Although today, with gold going up, we're up at 690 rather than 614 yesterday. So 2 sides to our story. Copper, which is fundamental to our modern lifestyle, and gold and silver, that is fundamental to preserving our wealth. So I'm going to talk about the copper project because it's the biggest mover in our portfolio right now. It's located along the spine of South America in Argentina, tight to the border with Chile. And what are listed here are a number of some of the largest copper mines in the world. So it's in the right neighborhood. Chile and Peru together produce over 40% of the world's annual copper production. Los Azules, which is our project, is a large project. Between the indicated and inferred, it's 5.7 billion tons, and it's 37.6 billion pounds of copper. I always like to think of other types of deposits, non-gold deposits, in a gold term. So if I was to take the gold price and divide it by today's copper price, you come up with an exchange ratio of about 536 pounds of copper, or at least yesterday, would buy an ounce of gold, be equivalent to that. So what we have here is equivalent to a 70 million ounce gold deposit that would have an average annual production of 321 million pounds a year, which is equivalent to just under 600,000 ounces a year, and a cost of $1.07 a pound, which would be just under $600 an ounce. Payback of $2.5 billion, 3-year payback, 27-year life. According to mining intelligence. This is the 8th largest undeveloped copper deposit in the world. And if you take out those controlled by the majors, it's the 4th largest undeveloped copper deposit in the world. In the last 17 months, we've been able to raise just under $400 million privately for this asset. Our two biggest shareholders beyond McEwen Mining are Rio Tinto and Stellantis, the 2nd largest mining company in the world, the 4th largest car manufacturer in the world. We've done, as I said, 3 financings since August of 22, first at $10 a share, second at 17, and the third just in last October at $26 a share, giving an implied value to this property of $800 million. And that, the whole purpose of financing it separately. You saw our share price at the beginning. It had gone down a long way. To finance Los Azules development would have caused McEwen Mining to have to issue a lot of shares at a very low price and suffer enormous dilution. So we decided to put it into a separate subsidiary and fund it independently. I led the first financing with a personal investment of $40 million to get it started. I naively thought we could raise the balance of the 80 we were looking almost immediately, but it took a year. Rio came in there, and we've continued financing it. So looking at how we've performed since that first investment closed in McEwen Copper, our share price has been powered by that, and we're up. Last night, we were up 107% over that period, well ahead of the NASDAQ, silver, Dow, gold, GDX, GDXJ, and copper, more than a factor of 5. We have 2 engines. One wasn't running at all. It was running in reverse, and that was the gold and silver. It's now stabilized, and I think both the copper and the gold will cause us to do much better. The copper ownership of 48% McEwen Mining, Stellantis at 19.4, Rio 14.5, myself at just under 13, and several individuals. Now, part of the value equation here is you want a reference point. So in the province of San Juan, where Los Azules is located, are 2 well-known properties, run by Lundin Mining, the Jose Maria property and Filo del Sol. Jose Maria was purchased for $485 million several years back by Lundin, and Filo trades with a market cap of over $2 billion. Now, I just want to point out some characteristics because we're in the same province. We're at a lower altitude. We're at 3,100 to 3,600 meters. Filo tops out at the base camp Everest. That has a big effect on working conditions, your workforce and your machinery. In terms of published resources, we have a larger copper resource and a higher copper grade than either of them. Now, some of these will use a copper equivalent, but just that we're closer to the power grid and the infrastructure, the highways. We are at an earlier stage of development. We put out an updated PEA in June of last year, which I'll talk about later, and they're at pre-feas and feasibility. We will be at a feasibility stage by end of first quarter next year. According to Wood Mackenzie, we are in the bottom cost quartile of the industry with our costs, and Jose Maria is at the highest. And you can see on the bottom right, we're at 800 million, Jose Maria is at just under 500 million, and Filo's at over 2 billion. I think we're much closer to Filo's price, ultimately. And then you get to, I'm sorry, I have a delay in my clicker here. When you look at the updated PEA, you're talking 27 years, small strip ratio 1 to 1.16, large copper production, $2.5 billion capex, And as I said earlier on, $1.07 a pound. Cash, all in, $1.64. The payback is interesting. We just came out with an updated metallurgical study. It added 3% recovery, and which adds $262 million to the NPV. Already quite good. We're looking at this mine because mining has a real problem out there with perception. The general public thinks we're a pretty bad group of people and they don't want us, but what we produce is necessary for modern society. We'd all cease to enjoy life if all the mining stopped tomorrow. So 2 years ago, I brought in an architect who's considered the Steve Jobs of the green living building space. And I asked him to sit down with our engineers and consultants and say, how do we redefine mining? And he's come up with some renderings. We're looking at a mine that this is the interior of the accommodation. It's terraced, it's growing its own fresh produce, hanging gardens. It's a very comfortable setting. And there's a competition for labor in this industry right now, and the best. So we're looking at creating something that is not considered a scar on the landscape, but rather a jewel. It will emit 1/3 the carbon. It'll use less than 1/4 the water. It will be powered by 100% renewable electricity. The fleets we're looking at will all be electric and will be carbon neutral by 2038. If you want to think about what the future looks like, you have to design the future. And that's what we're doing here. This is just a picture of how that setting would sit into the side of the hill to get maximum solar radiation. Just spoke about the benefits. Michael Metting, who I pointed out earlier on, has assembled a very experienced team of experienced miners in the area of San Juan. Long history. So we're well prepared to take this forward into production. We also believe there's further exploration upside, and sitting on the left-hand side of this slide is some drill holes where there was a 1,000-foot drill hole. We had 480 meters of 0.4. We have 26 meters in the middle of there, 1.5% copper. We have some water wells that, although it's RC and we a little concerned about how they logged it, but it had values over 1% copper. And we've been as high as 5% in the middle, isolated native copper. McEwen Mining, I have personally $220 million invested in McEwen Mining and McEwen Copper. I own 17% of McEwen Mining. For the last 15 years, I've taken $1 a year. We trade New York and Toronto. We reported today that our net income for the year was $54.7 million, or $1.15 a share, and that compares to last year a loss of $81.1 million, or $1.71 a share. Our working capital has gone up, as you can see on the left. We reduced our debt by 38%, and our mines are delivering on guidance right now. There's our costs, we delivered on production. I'd say we still have to drive down our costs. They're down to flat. And this is just looking over from 2012, from McEwen was formed. You can see that gap, and that contributed to our descent into hell. So just to conclude, we see a management value between $8 and $30 a share, and we're trading at under $7 today. Thank you.